14,000, almost back down to 12,000 on the news that it would be open on Friday last week. And then, again, we're still close here. So there's actually a tracker that I watch, and they have tracked how many ships have gone through the Strait of Hormuz since the conflict originally started, and they shut it down. There was the most amount of ships did go through just 2 days ago at 35 ships since the conflict started. So still way down from the hundreds of ships that used to pass through that corridor on a daily basis. But, a little uptick. So, we're back down to like 3 ships today is all that went through there. So it is still shut down. I believe they are tolling people. Still waiting on, the conflict to escalate in one manner or another. I think that there could be some things around Tether this week. I don't know if you guys saw what I posted over there on X, but Jim Rickards coming out and saying without saying that he thinks that Tether is the Bernie Madoff of stablecoins and cryptocurrency. We'll see if that ends up being the case. He said multiple times that he's not calling anybody out in particular, but he made some really good points that I want to touch on here as far as stablecoins go and treasuries. So right now, as these stablecoin providers aggregate these treasuries, they just sit there and they print them, 3 to 5% returns. And those treasuries are then off the market. They can't be rehypothecated, they can't be used in derivatives, they're not being used or traded in overnight repo. And it actually kind of adds to the value of treasuries. Again, supply and demand dynamics, right? However, the counter argument to that is, if there is a situation where people divest from stablecoins very quickly, that would also flood the market with more treasuries if people lost confidence in stablecoins. And Jim's point was, if we saw Tether potentially have issues, people would lose trust in other stablecoins and divest from those as well, moving cash out of crypto just in general. And I would agree with him. I think that would add additional sell pressure for treasuries. And that's not something I'd calculated in previous. Again, always changing things, always listening to new data points and kind of recalculating the thesis. So previously, I thought it would just be foreign debt that would be flowing back here to the U.S. during the reverse carry trade unwind and all of that. Oh, my wonderful wife.
Hi.
Oh, hey.
Viva Las Vegas.
Thank you. Viva Las Vegas. We're going to be at Vegas here in just another week. I'm going to be there for Bitcoin Vegas and then XRP Vegas. We do have an exclusive event for those that are in the mastermind on the Wednesday night. If you are in the mastermind, you will know what that location is. If you're not in the mastermind, I'm sorry. You're not invited. So, back to the situation at hand. So, with the treasuries, again, like I had talked about, I thought that it would just be like the BRICS nations, the UK, Japan, all dumping treasuries onto the market at one time. But if we do see implications for Tether when all of this plays out, I think that there could be a bank run, and there could be a liquidation of additional treasuries onto the market. So we're going to need even more stablecoin issuance here in the U.S., large banks and institutions stepping in to be able to drive demand for those treasuries, to be able to offset the selling pressure that we're going to see. Because I do believe there's going to be implications for Tether on this. The majority of what they hold in their balance sheet, and again, Jim pointed this out, this happened to be shared during an audit. Now, they didn't have a full audit, and they never disclosed what's all on their balance sheet line by line. They have given, basically, the New York regulator a pie chart of what they're holding for the collateral. Not overly impressive, but the large majority of that was commercial paper. We know what happened in 2008 when many of the large banks were holding large amounts of commercial paper, and the system was under stress. So I do think, that was years ago. That was 2-3 years ago that Tether did provide that pie chart. Since then, they have continued to buy treasuries and gold. So, maybe they've divested of some of that commercial paper, but with Evergrande, and many of the other things that people believe they may have invested in. If we did see the reverse carry trade unwind, there could be significant implications for that. I talked about a depegging of Tether in my first domino theory. Since then, I've revised to say it could be an either or. Tether depegs, or maybe there's some sanctions, depending on what Tether is being used for and what comes to light about it. So, again, there's a lot of people that use Tether. I think it provides a great utility outside the U.S. There are many jurisdictions that have found, huge benefit in transacting in that currency. I think that it's odd to me that they would have launched a U.S. compliant stablecoin in USAT if they intended to get USDT compliant within the 3-year period that they had for the window after the Genius Act. So, yet to be seen. A lot of people have fudded Tether for a long time, and it's never had any issues, right? So, always just hearsay. We'll have to see if anything actually transpires from it, but I do think it will be looped into the cascade and credit crisis when all of this plays out here in the not too distant future. We're still waiting on the reverse, carry trade to unwind there in Japan. We don't have any inkling that they are going to come out and raise interest rates in the short term here. We'll go ahead and look at the yen versus the USD on TradingView. Back up in 159-ish, 158.97, trending a little bit higher here. We really need to see 160, 161, 162 before the Bank of Japan's going to have to act. That is going to require oil to jump higher. So that would also require likely an escalation in conflict between the U.S. and Iran. They did have a 2-week ceasefire that did end today, was the last day of that ceasefire. So we will have to see what transpires over the next 24, 48 hours in that region of the world. It is daytime there now, early morning, I believe. So, if conflict was going to happen, most of the time that's overnight. There's bombings and things, and again, not wishing collateral damage on anybody, praying for everybody in that region that this conflict resolves swiftly. But in order for this to pan out in the way that I think it's going to go, we're likely going to see an escalation. And again, that kind of goes back to the cutting of the underwater sea cables. If we see Iran do that, we've also got indications that they're looking to close the Strait of Oman. So if they come across the peninsula there and close the other strait, be about 32% of global supply of natural gas and oil that would then be shut off. We've never had a situation like this before in all of recorded history where there's been this large of a drop-off in oil production or access to it. I don't think we've really felt the impacts of it yet. I think that people, markets are forward-looking, right? So they're going to price in what they believe is going to be the impact, but I think the impact is going to be much more significant than people have priced in, and we are going to see oil prices much, much higher in the near future, especially priced in yen, which will then, of course, force the Bank of Japan to have to act at their meeting this month, which is on 4/28. I anticipate that they will have to raise interest rates at that point, and that will then cause the cascade that we've all been waiting for as we lead up into May, June, and July here. I think we're in for a very interesting next 3 months here in 2026. So that's where it's at. Another point to note is the hacks that have happened to these DeFi protocols, and really it wasn't an exploit of Aave. There's been a couple networks or protocols or DAOs that have been exploited in the past 3-4 weeks here. 2.5-3 weeks ago, we had one of those DAOs or protocols hacked, additional collateral minted, and then they exploited Aave with that, and now they've done it again with Kelp DAO, and I don't remember what the token was, but it felt like 98% in a very short period of time. The whole premise behind a lot of these, I say the whole premise, a lot of the value that people place in these tokens and networks and protocols is derived from a limited supply. If there is an exploit that causes additional minting of the token, it's no longer a limited supply. You could print more of it, right? So that's a lot of the reason I think many of these will go away, outside of the fact that they'll be tied to Tether, and Tether will drag them down when it goes down. I think there'll be a huge consolidation in this asset class when all that plays out. I think potentially in the not too distant future, again, like I was mentioning. But all that being said, Aave is now in a bad spot because they've taken that collateral, because it's a decentralized protocol. Basically, anybody can. Rave was the token's name. Thank you, Mr. Morgan over here on TikTok. So, they minted an extra $293 million worth of this token. They then took it to Aave. They borrowed, 90% LTV and wrapped ETH, and left them with close to $280 million in bad debt on their balance sheet. Now, Aave does have some backup umbrella stuff that they put into place. None of it's ever been used or tested, so we will see how they fare on this. I wish them the best. I hope that it works in the way that they had intended, similar to what reinsurance or insurance would be on a protocol like this. But with it being open and decentralized, and it's accepting the collateral, right? It doesn't have any way to be able to discern if it's good debt or bad debt or what it is, if the tokens are legitimate or not. As long as they're a token that is ETH based, you can stake it in that protocol and borrow against it. So some pretty significant implications for them. They are at 100% of their ETH withdrawal limit. And the reason that took place was Justin Sun, along with many other people, withdrew $5.4 billion worth of ETH out of that protocol when all of this took place, in fear that other people would also, do the bank run. So with that, they're really at limit. People can't withdraw any more of their stuff. And with that, there's a potential that people would start to lose trust, eroding that away. If I were the central planners, I would orchestrate stuff like this so that people felt the need or were compelled to then involve the regulators and institutions and guardrails and oversight and compliance into all of these DeFi protocols. I'm not saying that, this was orchestrated or that it was done on purpose, but it's really convenient with the timing.